Welcome back. The Nifty 50 sitting pretty with gains of about 150 points as we speak. Let's focus in on earnings though. Dabur posted an above expected revenue, above expected PAT and EBITDA. We're joined by the management. In fact, Mohit Malhotra, the Chief Executive Officer of the company, is joining us. Thank you so much, Mr. Malhotra, for taking the time. I do want to ask you about the volume growth first. It was strong at levels of 34% or thereabouts. Is this largely on account of the low base, or is this momentum that is that you're seeing in the business, and is this sustainable?
So when we started the quarter, we saw the operating environment being very challenging with the advent of the second wave of COVID. But I think our continued investment behind power brands, increasing our distribution footprint, structured and balanced approach for driving cost management because the inflation was unprecedented, this all helped Dabur overcome the challenges of COVID fairly fast. And, there was a learning which is coming in from last time, wave one also. So we were pretty agile and nimble in terms of in the face of this adversity of COVID. And I think the team did a brilliant job. And we've registered this kind of a 32% value growth backed by volume. And I think it's all on the basis of fundamental change that we've been doing in the organization since the wave one of COVID, which is what we call strategic business transformation. So that is what has helped us deliver this kind of a growth. Going forward, I feel pretty encouraged that if the same kind of agility, nimbleness and resilience is demonstrated by the team of Dabur, we'll be able to deliver a strong double-digit growth for the full year going forward. There will be a couple of humps in the quarter because of the high base of our healthcare last year in quarter 2, quarter 3. But I think the discretionary portfolio and the foods portfolio is pretty resilient, and it will more than compensate for the hump that we'll see in the healthcare business. And as the markets open up and modern trade is opening up, e-commerce is firing, and GT also comes up with the lockdown getting released and restrictions, I think things will only look up. Plus, we'll have a softer base of last year also coming in. So I'm pretty encouraged on the prospects of the balance of the year.
Mohit, hi, morning. If you could help us understand how exactly are the demand trends as well shaping up? What are the recoveries like, especially in your rural segment post the second wave?
So first I'll talk about the syndicated data, which is what it's showing. We are seeing in the quarter one, the growth of roughly around 26%. And this 36% growth. And this 36% growth is partially volume growth of 18%. And 18% is value growth. So value has come in because of the inflation and the price increases that companies have taken. But volume growth of 18% is pretty robust. But that's coming on a base of very low lockdown because it happened in the quarter one last year. So it's coming on a very low base. So we think the demand situation should improve as the lockdowns are easing and supply chains actually streamline for the current year. And with the festive season approaching, it should be good. Now, if you look at the granularity in terms of urban and rural, for the first time in 3 quarters, we've seen that urban growth is higher than the rural growth. But to me, this is again very optical because it is coming on the lockdowns in urban areas. Last year, it was completely shut. So the urban growth is looking higher. But in our numbers, we find rural also is showing a V-shaped recovery completely. And rural India, on back of the stimulus that government is providing, MSPs, PM Kisan Yojana, another installment coming up, enrollment happening in Manrega, all this will really bolster the rural demand. And with monsoon being good and agricultural produce being good, I think rural will bounce back. It's a matter of time that rural will catch up with urban, and both will be in very strong digits going forward in the year.
Mohit, the price hikes taken by the companies so far, we understand, have just been enough to mitigate the input cost pressures. Will you then be taking more price hikes? And, what's the outlook for the margins going forward?
Yeah, we've seen unprecedented inflation hitting us. At least I've not seen this kind of inflation in the past 5 years. And this inflation is coming in all the baskets of our raw material and packaging material. First of all, hydrocarbon linked packaging and raw material, both the light liquid paraffin prices and the HDP, PET prices, all have really gone up. The agri commodities have gone up, in which edible oils have shot through the roof, and then herbs and spices, which is very big for us, they've also gone up. Honey prices have shot up. Amla fruit prices have shot up. So across the board, we've seen a huge inflation picking up. We've taken a 3% price increase to mitigate this impact of inflation, and but this is not enough, to your point, because we feel there'll be softening of the commodity prices happening in the second half of the year. So we will be in a position to absorb this for another quarter, while some we passed on by way of price increase, but majority will absorb by way of cost cutting and cost optimization measures that we've taken in the Samriddhi project for us, and we are trying to cut and optimize costs everywhere, be it fixed cost or it's variable cost or it's capex cost, etc. We've cut across the board the costing. We will wait for another quarter, and we will not be in a rush to pass on this as a price increase, because price increase, if you take price increases, it can also impact your demand. So we want our volume growth to be sustainable. So we'll hold back, absorb as much as we can, and in case the moderation doesn't happen in the commodity prices, then we might have to take a second round of price increase, which we are resisting at the moment, because we feel the softening will happen in the second half of the year. But the guardrail is that we want to maintain our margins or grow our operating margins.
Well, yeah, it's always a thin balance between maintaining margins and volumes. Mohit, give us an update on the international business and the outlook going forward there.
The international business is in a good space again. That there's a recovery that we saw post-COVID happening in international business. The total international business has grown by 34% in terms of constant currency. There was some translation loss from Turkey coming in, where Turkish lira got depreciated by 11-12%. But barring that, constant currency terms, all markets have done secularly very well for us. Middle East, North African region has registered a growth of 48%. Egypt registered a growth of 44%. Our SAARC region, which is Nepal and Bangladesh, grew by 40%. Our America business of Namaste also grew by around 38%. And Sub-Sahara registered a growth of 36%. So we are very confident for the full year we will be having a double-digit growth in international business. But for the caveat of COVID third wave, if it hits us, then we have a problem. Like the situation in Bangladesh, at the moment there are around 17,000 cases happening every day. So Bangladesh is going through a very strict countrywide lockdown. So, but I think situation is temporary, and this situation will also improve as vaccinations go up in that country also. But for that, I think international is again in a good place. Yeah.
Mohit, good to speak with you today, and once again, congratulations for an excellent quarterly performance.